what's activity-based costing? Activity-based costing is we're going to take activity costs, our overhead costs, and break them into activity costs, and then break those into activity overhead rates, and then assign those to products. And so, again, the idea here, instead of just taking departments and machine hours, now we might have machine hours, direct labor, we might have number of units produced. There's a lot of different ways that we can apply costs. And the whole goal of this is to get an accurate depiction as possible of our overhead rating. So, or of our overhead allocation. So, right, if we looked at the previous ones, we had the plant-wide was just one allocation method. Now we had 2 variables for allocation. Now we're saying we could have 3 or more variables for allocation. Again, as it gets more complex, we're probably going to have a likelihood of having a more accurate answer, but then it's more difficult to track. You need a more sophisticated staff. If you don't have a more sophisticated staff or team doing this, or management team doing this, you're going to have more likelihood for error. So, plus some advantages and disadvantages to each. So let's go through how we would do this. There's 4 steps. Memorize these steps. But again, I want to always go back to what is the purpose of this? Just overhead allocation. So all we need to do is know how much money we're applying based off department, make sure it reconciles to total money, and then know our denominator. What are we dividing it by? And then we allocate it based on the same denominator, right? So if I determine the cost by hours, then I apply by hours. If I determine the cost by machine hour, I multiply by machine hour. Always just keep your buckets aligned. So identify the activities and the costs that they cause. Trace the overhead costs to cost pools. So identify activities and the costs they cause. So if I'm building something with my hands, it's direct labor. If the machine's building, it's machine. So these activities are, what are they building? Trace the cost to the cost pool. Say, okay, so for all this labor, the indirect labor associated with it is maybe $10,000. Maybe for all this machine costs, we're budgeting $50,000. Then we determine the activity rates. So how much activity happens in a year? How many labor hours? How much machine hours? And then ultimately assign those buckets of our cost basis or cost pools to the cost objects. So once we determine the activity rates, the rate per hour, then we assign it to the object. The cost object is just our product that we're selling. So again, we can do activities based on anything, right? Anything your mind can think of, we can make an activity as long as there's some kind of correlation or relationship to the cost we're trying to allocate. And so examples that you'll see in your homework or your life is machine setup, machine repair, factory maintenance, engineer salaries, power lines or line power, heating and lighting, direct labor. You can name it. You can go pretty much with anything. So let's say we identified these 6. We'll identify activities and the cost they cost. So we'll say indirect labor, well, machine setup, 700,000. Again, this will all be given to you for your homework, but in real life, I'd go and I'd say, okay, how many salaries are used for machine setup? And I'd look at all the supervisors. I'd look at a report with all the supervisor payroll responsible for that. Say, oh, this is 700,000. Machine repair, how many people did we have repairing machines? How much indirect labor did we use? Factory maintenance, engineer sales, assembly line power, heating and lighting. So I went, okay. And I'd go through and just look at my bills, look at my computer, QuickBooks, whatever I'm using, look at all the bills, and then determine what my overhead was in the past, and then I budget it for the current month. Say, okay, based on the past, I think it'll be up 10%, down 10% or the same. Then I'll trace overhead costs to activity cost pools. So I might say, well, all these costs will be associated, some will be associated with craftsmanship, some will be associated with setup, some will be associated with design, and some will be associated with plant services. And then I trace them. So I'll say craftsmanship, we know won't really uses assembly line power. And so we'll say that we expect $600,000 to be applied to craftsmanship. For setup, it's just machine setup and machine repair. We know that $2 million should be applied to this pool. Design modification, we know, we'll say engineering salaries probably is going to be tied to our design modifications. Our plant services, They're going to be factory maintenance and heating and lighting. So we bucket it off into these activity cost pools. And then we determine the activity rates. So the activity cost pool craftsmanship, we need to determine a rate based off of this. So step 3 is to compute the activity rates used to assign the overhead. So how do we determine it? We need a proper identification and proper measurement of activities. I know that seems like a lot. Really what we're doing is, what is our expected activity level? That information is going to be given to you. So we have the overhead cost assigned to the pool. I feel like these slides kind of over confuse it. So maybe just step to here. That's the way I think about it. Here's the costs. You'll be given expected activity. In real life, you'll need to determine, okay, how many hours do we expect the craftsman to work? But that'll be given to you for your homework, or especially managerial accounting. Cost accounting, they might have you use a little more judgment. But determine activity rates, overhead costs assigned to pool, and expected activity level. And so this expected activity level will be given to you, and then you determine the activity. So they're saying, craftsman, well, we know we assigned $600,000 based off of the assembly line power, right? And we're going to say that we're going to use direct labor hours to assign the costs. And so one of the assumptions managerial accountants are going to make is, okay, direct labor hours makes sense for craftsmanship, yep. And then the 30,000 hours, we'll base that off history and then make a forecast in the future. So we're saying that maybe last month we had 29,000 hours. We expect it to be a busier month. So we're going to say 30,000 hours expected activity level. And then we say, well, we expect, and a good allocation is $20 for direct labor hour of craftsmanship. Same thing here. All this will be given to you, where they're saying, oh, 200 batches is reasonable this month. It's about $10,000 a batch. $120,000 per design. If we did 10 designs, and then plant services, they're saying, well, it's actually the best indicator is our square footage. So $50 per square feet. And then we just apply it to each product. And so we'll determine how much. So how would we go to the next step? We just determine how much the product uses of each of these. So we'd say product A maybe uses 100 labor hours, 10 batches, 1 design, and 500 square feet. And then we'd calculate the overhead costs based off of all of those variables. It's like a multivariable analysis. And so this is kind of showing you how all the arrows go, but $20 per hour. And then they're saying standard go-karts. You could do it by department or product. If we're doing process costing, product by if it's a job costing. So they're saying here, if we're doing go-karts, the standard go-kart allocation uses 25,000 direct labor hours, 40 batches, didn't need any designs, and used 12,000 square feet of space, which resulted in $1.5 million. Again, we're using the same example. This is $4.8 million in cost. But then the custom go-karts needed all of the designs, needed all of the batches, almost all of the batches, very little direct labor hours, and then less square footage, which resulted in 3.3. So when we get into activity-based costing, the overhead cost per unit is significantly higher, right? And so the idea here is if we accidentally went with a plant-wide method, the plant-wide method would have told us that custom go-karts might have been very profitable. So let's think about it from this perspective. Let's say you're selling these go-karts. I always want accounting to be, and your education should always be applicable. Let's say we're selling these go-karts, and we say, let's say that the go-karts, the direct material and direct labor for both a standard go-kart and the custom go-kart's $1,000. Okay, to make it simple, no matter what, we know that direct material, direct labor is $1,000. So using the plant-wide method, we know our go-karts, our standard go-kart costs us $1,720 to make, and our custom go-kart costs us is at $2,200 to make. And let's say we can sell the custom go-kart for $3,000 and the standard go-kart for $2,500. So for right now, 2,500 minus 1,720, we make $780 in profit for our standard go-kart. And we make we make $800 for a custom go-kart. So as a company, we'd say, hey, man, our custom go-kart, we should try to sell more of those custom go-karts. They make us a lot of money. They're making us $20 more per go-kart than our standard go-kart. So let's focus on custom. Then if we go into the next method, department method, we'd recalculate and determine that, oh no, 2,500 minus 1,700, we're actually making $800 for the standard go-karts, and for the custom go-karts, we're making 3,000 minus 2,300. We're making 700. So actually, using the department method, we'd have a profit of $100 less. And so we'd say, wow, maybe the standard go-kart is more profitable for us. So let's try to sell more standard go-karts, but custom go-kart is still okay. Then if we go to activity-based costing, and let's say we determine that method's the most accurate, we're saying the custom go-kart costs us 3,300 plus our 1,000 of other costs. 4,300, we're selling it for 3,000, or we're selling it for, 3,000. We're actually at a loss of $1,300. And so this is a good example of if we're selling for 3,000 and 2,500 for the standard, then we'd say, don't make any more custom go-karts, only make standard go-karts, we're losing money. And there's many companies who've fallen into this trap where they don't figure out their actual activity-based costing, and they'll make products that aren't profitable. And because of that, they'll quickly drive themselves out of business, and they'll ask themselves, well, why? It looks like we're making a profit on everything, but no, it's because you're not allocating your costs correctly. So really be careful of that, and make sure you understand how important that allocation principle is. If we're making estimates, let's make sure that they're as accurate as they possibly can be.